Good day, I'm Chartered, your accounting tutor. In today's class, we are still under errors in accounting and bookkeeping. And today we are looking at errors affecting the balancing of the trial balance or errors affecting the agreement of the trial balance. What are errors affecting the balancing of the trial balance? These are errors which committed or occur prevent the trial balance from balancing. Meaning, if this error occur when you're posting transaction either in the subsidiary books or in the ledger account, it prevents the trial balance from balancing. And that is why the name is clear that it is errors affecting the agreement or balancing of the trial balance. Now, let's look at such errors. Examples of errors are, number one, we have what is called the casting error. The casting error, this is a situation whereby the figures used in accounting is either overstated or understated. That is, you overcast the figure or you undercast the figure. For example, if an amount that's supposed to be posted in the books of original entry or in the ledger is 20,000 and you post 2,000, it means you have understated the figure. If an amount that's supposed to be posted in the books of account, for example, 20,000 and you post 25, you overstate the figure or you overcast the figure. And in short, the error is called the casting error, which results in either in overcasting or undercasting the amount used in the transaction. So that is what is called the casting error. A situation whereby over or understatement of a given figure, either in the books of original entry or in the ledger, will cause the trial balance not to balance. But this overcasting in most cases affect only one account. That is where it affects. But if the casting happens in the two accounts, it cancels each other. This is a situation whereby the undercast or overcast affect a single account, not the two accounts. For example, in double entry, if the overcast pass through the sales and cash book simultaneously, as the case may be, it means it will cancel each other. But in this case, the overcast or undercast affect a single account. That is when it will affect the trial balance. So take note. So here, that is the casting. The next one, we're talking about partial reversal of entry. Partial reversal of entry. In what do you mean by partial reversal of entry? In accounting, respecting the double entry principle of bookkeeping, any debit entry must have a corresponding credit entry. And all accounts have their position to be recorded based on the principles of accounting. For example, all sales are credited. For example, all purchases are debited, all expenses are debited, all revenue are credited, and like that, all liabilities are credited, and what have you. So, we talk about partial reversal. For example, all sales are credited, it is clear. Then by way of posting, instead of crediting sales, you debit sales. Then going to cash, you still debit cash. That is, cash is posted correctly. Then coming to sales account, which is supposed to be credited, you debit it. That is what's called partial reversal. Cash account that be posted correctly by debiting the amount that is received from customers. Coming to sales account, which is supposed to be credited, the amount is still debited. You reverse sales while cash is posted correctly. That's what we talk about partial reversal. A reversal in the single account while the other account is correct based on double entry. That is partial reversal. Take note. So that is the beginning of partial reversal entry, whereby other entry is correct and the other one has been partial reverse. Instead of debit to post credit, instead of credit post debit, as the case will be. That is partial reversal. Next, we have what is called one-sided posting slash, or you can call it omission or one account. Whereby, just as I'm still saying, the double entry principle says that any debit entry must have a corresponding credit entry. So if you post a transaction in the debit side and you forgot to post in the credit in the debit, you post a transaction in the debit side and you forget to post in the credit side, that is one-sided posting and vice versa. Example, if wages supposed to be posted in wages account in the debit side and also in the cash account in the credit side, and then you post only in wages account debit and you did not post in the credit side or cash account, then that is one-sided posting or one-sided omission. Next, we have what is called overs/understatement of opening or closing balances in accounting. In accounting, based on going concern concept, most accounts, especially a real account, have opening balances like furniture and fittings, and other accounts like cash, stock, and others have what is called balances brought forward. So as the balances are brought forward, if you understand any of the figure, either in the closing balance of the account or the opening balance, the account will not balance, because it is the opening balance that other balances in the current year are added, other accounts in the current year are added to the balance, giving the closing balance figure. So if the opening balance is not correct, it will affect the closing balance. That will be taken to the trial balance. The same thing to the closing balance. If the opening is correct, at the end of the day, the closing is not correct, it will also affect what is taken to the trial balance. That is what we mean by overs and understatement for opening or closing balances in accounting. The last one we're talking about posting into wrong account. Posting to wrong account is a situation whereby the person posting the transaction does not have idea of account, or even have idea of accounting, whether fatigue or any reason, decided to post the whole transaction into wrong account totally, then it becomes what is called error of wrong post. For example, you're supposed to post return inward into return inward account, and then you take return inward and post into return outward account. That's a total change, that's a total wrong posting. Or we know that all sales are posted in sales account, and you take sales and post into another revenue account. That is error of wrong posting completely. So wrong posting is posting into wrong account, or the account involved is a wrong account, not even changing the side or not completing the entry. The account that the transaction is posted into is a wrong account entirely. That is what is called error of wrong posting. It will affect the agreement of the trial balance. Then before we continue, if we're talking about errors affecting the balancing of the trial balance, there must be an account that is introduced. You have to introduce what is called a suspense account. So before you treat or before you handle errors affecting the trial balance, you must understand what is a suspense account, meaning the balance that the difference that the trial balance we bring out when balancing it is transferred to an account called a suspense account, pending when the errors are being investigated and then detected for correction. So a suspense account is an account. Let's look at the definition. Suspense account can be defined as an account used for recording the net difference that occur in the trial. That is when you prepare your trial balance and if you don't agree, the difference that arises there is called the net difference for the trial balance on a temporal basis, temporarily, until the errors or the errors in the account are detected and corrected. That is, as you prepare the ledger account, you post into ledger account and prepare your trial balance and discover that the debit side is either more or the credit side is either more. That difference that makes the trial balance not to balance is now taken to the what is called a suspense account, either in the credit side or in the debit side, pending when investigation is carried out to detect the errors or the error that is committed to make the trial balance not to balance. That is what is called a suspense account. A suspense account. So before you understand how to handle errors affecting the trial balance, you must also appreciate what is a suspense account. It is an account that balance that disagree and make the trial not to balance is taken to before investigation is carried out, and then as the errors are being corrected, the difference are now being posted to the suspense account respectively. So as we go ahead correcting the errors, you see how suspense account is being used to correct errors affecting the trial balance. Let me look at the first error, which is the casting error. The casting error. I already explained. Let's look at the illustration straightforward. The sales account was overcast by 3,000. That is, on investigation, after the trial balance was not balanced, it is discovered that the sales account was overcast by 3,000. When the sales account is overcast by 3,000, you must understand the double entry. That's why I always repeat, time without number, that double entry is the bedrock of financial accounting. Double entry is the bedrock of finance. Meaning, understanding double entry will give you a stronghold for you to understand how other topics are treated in financial accounting very well. So now we talk of sales account overcast by training. You must know the position of sales account. Where is sales account posted in accounting? Sales is always credited in the ledger account. Even if you take it from the books of original entry, which is not a double entry, but taking it to the real ledger, which you balance and transfer to the trial balance, you know that sales brought down must be taken in the credit side, or is posted in the credit side. So if there is an overcast, or overstatement, it means that the credit side of sales account was more by 3,000. So for you to understand how errors are corrected, first you do what is called exposure. You expose the error. You now try to show where the problem is coming from. Though this is not needed when correcting errors. Errors are corrected using the journal proper. This is just as a result of a lesson I'm trying to practically show how the understanding of the errors, how they are being posted in the journal proper, why is some debited and why others credited. That is why I'm talking about expose the error. So here, if you understand the principle of double entry, it is clear that all sales are credited. So if there's an overcast of sales by 3,000, it means the credit side of sales account was more by 3,000. I can see error. Error here means the credit side was more by 3,000. So if the credit side is more by 3,000, how do you correct the error? In correcting error of overcast, it is very important for you to know that any overcast should be posted in the opposite side. Any overcast should be posted in the opposite side where the overcast occur. Like in this case, the overcast of sales is in the credit side. So for you to correct the error, it means you are going to post the same amount, that is the 3,000 that is being overcast, in the debit side, so that the amount will cancel each other. By way of balancing, if 3,000 is posted wrongly in the credit side and the same 3,000 is now posted in the debit side by way of correction, if you balance the account, 3,000 will now minus 3,000 and 3,000 it become outside the account, that is to be zero. It means 3,000 was over in the credit side and posting 3,000 in the debit side of the sales account. It means by way of balancing the account again, the 3,000 in the debit will now cancel the initial 3,000 that was wrong in the credit side, and the whole scores will be settled. And that is how error of overcast is complete. Please always post the opposite side. If it's the debit side is over, post that the same amount in the credit side, and vice versa, and then the error will be corrected. And that is why, by way of correction, we are putting the same 3,000 in the debit side. And putting in the debit side, that is when you bring suspense. That's when you bring suspense. I say suspense 3,000. Suspense 3,000. And if suspense is debited in sales account, it means there will be a corresponding entry. If suspense is debited, coming to suspense account, as you can see, it will be taken to the credit side, because in sales account, suspense was debited by way of correcting the error, taking it to suspense account, you move it to the credit side to complete the double entry position. And that is why suspense is being credited with sales 3,000. And that is the understanding. Let's look at the second illustration here, because we are talking about casting error, which result into overcast or undercast. Let's see a situation of undercast here. Here, an example illustration is still like this. The wages account was undercast by 4,500. It means in the wages account posted in the ledger, there was a shortage by posting the amount that's supposed to be in the wages by 4,000 naira. Here it is an undercast, though here the amount is given directly. In some practical situation, the amount that caused the difference will be given to you. For example, somebody will say wages which supposed to be 8,000 was posted as 3,000. You know, the two amounts that caused the difference we mentioned. Wages that supposed to be 8,000 was posted as 3,000. They know that there was an undercast of 5,000. Though here, a question can be given direct in this way, telling you the difference that occur. But in some situation, the two figures will be mentioned. social amount was the actual amount, and then the other amount was less, or social amount was the actual amount and the other amount was higher. So in that case, you have to determine either the overcast or undercast by yourself, then you still treat it the way I'm explaining. So in this case, it is clear that the amount that was undercast in wages was 4,500 naira. How do you correct it? Here too, you must understand your exposure. It is still double entry here. You know that wages and expenses and all expenses are debited. So for you to treat undercast, it simply means that you must know the area where the undercast occur. You know that if there was undercast in wages, it must be the debit side because all expenses are debited. Then it means in undercast, you are not posting the opposite, but you are posting in the same side where the undercast occur. You know that all expenses are debited, and if wages is undercast, wages is also we debited. Therefore, the shortage will be coming in the debit side. Then it means you are going to put the difference in the debit side, so that by the way of balancing, it will add to what was shorting. Then the whole account will balance when you balance it again. So here, by way of principle, say all undercasts are posted in the same side where the undercasts occur, while overcasts are posted in the opposite side where the overcasts occur. So take note. So now, by way of suspense, now that the undercast was debited here and suspense introduced, which you must introduce, you now take it to the corresponding account, which is suspense account. In the credit side, you can see wages 4,500. Let's now look at the journal proper. The journal proper is the main account that is used for correction of error. This is the account that is used for correct. Anytime errors are being corrected, there's no other account but the journal proper and the suspense account, as you can see. Let's look at the journal proper. The journal proper, you know that it's a book of account used for recording all transactions that are not suitable in the other books of original entry. Which error is also used, which journal also used for correction of errors. Let's start with the first one. Here, there's no explanation. As in case of examination, nobody asks you to expose the error. You have to form a straight and post the transaction and also use a suspense account. These are the two accounts that are needed in that situation. So let's look at here. If our sales is now debited with 3,000, learners should not be confused. We already explained that in the process of overcast, sales was debited to correct error. That is why sales is now debited with 3,000 by way of exposure. You can see it there. The suspense account was credited, as you can see, and that's why suspense account moved to the credit side. Then you must narrate, being to correct error of overcast. No, in narration you have to be brief and clear. Don't just put statements. If you know the name of the error, you can just make it very clear. Being to correct error of overcast. You can say overcast of sales, but just to make it lengthy, just cut it short and clear and more professional. Being to correct error of overcast. Then coming to the wages, here I already explained. Wages is also debited by way of correction because it was undercast and 4,005 was added to the debit side. And look at wages being debited by way of correction and suspense account is being credited by way of correction. Then in this case, you have to still explain being to correct error of undercast. This is how error of casting error. This is how casting error is corrected in the journal and also the suspense account. Let's watch out to see how we treat the remaining errors affecting the trial balance in the next class. Watch out.